Todd, let's start with agricultural. We're seeing dry, hot weather boosting grains in recent weeks. Has this got much further to run?
Good morning. I think it's got a lot to this run. I think that these were asset values that have been underpriced for quite a while, and I think that now you take a little bit of the weather, you take a little bit of the weaker dollar, and now all of a sudden they become back in demand again. And we've had pretty dramatic runs here. I mean, if you look at wheat and corn, they've rallied about 40% from their lows. So, and soybeans have now finally, after having a little bit of struggle, have finally broke out to the upside as well. So I think we have higher prices. I mean, in the very near term, probably see a little bit of selling, but overall, I think they're going to be great buys. And if the equities start to sell off, I think that'll bring in some new money for some alternate investments as well. So I think the road looks very good for the agricultural spot right now.
Todd, let's talk oil. We're around $44 and change. According to Goldman Sachs, OPEC needs to, using its words, shock and awe the oil market for prices to gain. Do you see a shock and awe tactic from OPEC or not?
No, I think that OPEC is worthless. I think they had nothing to do with the price of oil in the United States. I think that we've now developed that we have enough oil so we don't react every time something goes on in the Mideast. We saw that in October when OPEC decided to get involved in the first place. We were at $55. Now we're at $44. I think you got more room to go on the downside. We do not have enough growth here. Demand is waning, although we hear that it's higher, but it's really not because we don't have any real manufacturing going on. So the overall demand for oil is lower, plus the fact that we have in the United States a 200-year supply without affecting anybody. So we're not going to be affected by what OPEC wants to do, although we can try to pretend it will. It actually doesn't, as we can see over the last 7 or 8 months.
Todd, I liked your notes. You said general markets are in a coma, searching for a reason to go further. Are they going to find the reason?
I think they'll find the reason. I do believe that reason will be to the downside when they do find it. I think they're circulating. We've had all of the good news we can price in. We've had good earnings, which, you know, you can look at them two ways. By contraction, and they had better profits, not necessarily great earnings, but good earnings. You've got all these promises. What happens when they don't deliver on these promises? What happens when we've already seen that we're making less money? And, of course, the continued retail ice age. A lot of things going on that don't look good. I think they're waiting for one bit of shock and awe to start to sell off. And until it happens, I think we kind of meander around here in summer trading.